Alright, today I want to take you through a position I'm really proud of, as a position on Euro USD that I took yesterday. Basically, all the stars were aligning and we have gotten almost perfectly. These are the results from the trade. I don't even know how much it was, as we took it on multiple accounts, but I can say it was a very beautiful trade. So let's hop into the charts and show you how we actually did this. What we like to use pretty often lately is what is called currency linking. Now, I'm not the inventor of this. It's something that I learned as a trader, like, I don't know, maybe 5 to 6 years ago when I was trading with Astro. I don't know if you guys remember them, but I was trading in London with them. But I basically never used it as much as I'm doing right now until I saw my Dutch colleagues of Forex Library doing this, so huge shout out to them. And then it started clicking for me once more that this is definitely the way to go. So it was a trade on Euro USD. Basically what we did for this is we started looking at the separate currencies one by one. So in Euro USD we have two currencies, right? We have Euro and we have USD. So first of all, let's check the DXY. The XY is the dollar index, the US dollar index, aka USD, right? So let's check this one out. And the trade was taken yesterday, or actually the day before yesterday, as I'm recording this on a Saturday. So it was Thursday. It was this box right here between those two beautiful little lines. It was right here. So DXY, basically what we're doing at this moment, we are just analyzing DXY and we're analyzing Euro, and we're seeing, okay, is it possible for one of these to go down? Is it possible for one of these to go up? If so, then we are going to find the correlating pair that is going to represent this move, right? So let's say, for example, we have a bearish Euro and we have a bullish dollar. Then we're going to see, okay, let's put Euro against the dollar. Let's trade Euro USD short. Did I say this right? I guess so. Anyway, if you're trading Euro USD short, I'm just not preventing me making a mistake. If you trade Euro USD short, you want to see a bearish Euro and a bullish dollar, right? The first currency is always going to lead the conversation, which direction is going to go at. Right here, we have the 4-hour on dollar. But what is interesting is this little box line for us right here. And let me put like two big lines as well in red so that we can see on a higher time frame as well what is going on here. So let's check the daily. So as you see, the daily dollar has been super bullish, and I expect it to go even more bullish, right? Because if you look at the bullish price lags, we're nowhere near being done yet. I saw this coming into a really good, we could call it a consolidation level, not a block, whatever you want, supply, right? But it is definitely a level, and we came into that. But overall, I would say I would like dollar to go above these highs even, right? Before we see some type of a meaningful pullback. Now, we did came up here, and we basically broke above these highs right here, above these small little highs, going into this very big order block. And I saw price starting to slow down its move, right? This was on Wednesday afternoon, Wednesday evening. I saw it slowing down, and then I saw it breaking lower, right? I saw it breaking lower, and then London Open was right here, this big down candle. So I saw it breaking lower. Then I started looking at, okay, nice, right? What is a place where dollar could go towards to for us to take a position? Now, if we're expecting a bearish dollar for the day, then I would see, okay, what is a price point for us to go towards to? Now, this was the first one that I marked out, and this was the second one. Now, looking at this afterwards, as I reviewed this trade multiple times over already, this one was already used right here for this last push. So there was basically no real other solution than this was going to happen, right? Go to tap here, liquidity grab, and go. Very beautiful position. Now, we have to see a bullish Euro to trade this against with. Now, what we saw on Wednesday, we saw a break of the lows. Then we saw a very big aggressive push coming out of there. A pullback, another aggressive push coming up higher into basically our of Thursday, right? And then we saw a very nice pullback coming underneath these lows, taking liquidity, preparing for it to go even higher. So basically for me, these stars were aligning, right? DXY is bearish, Euro is bullish, and practically nobody is expecting it because Euro USD has been so bearish, dollar has been so bullish. Now there was a little something, right? There was news at 9:15 and 9:30 my time. So this is just after London Open. This was France PMI and German PMI. Two possible big movers, right? In the afternoon, we also had USD PMIs. So then I went to Euro, and you can see it already. This was my position. These were positions from the other days of the week. As you can see, I've been killing Euro. I've been killing Euro USD. Very proud of that. I will make some videos about that as well, but this was the trade that I took originally that I want to talk about today. So I saw price moving up a little bit higher right here. Price basically keeping on breaking highs. Then we saw a retest of these lows, right? A retest of these lows. And now I was just waiting for price to take out liquidity. Now, if I'm looking at liquidity, and let's take a 15-minute because that's going to be easier. If I'm looking at liquidity, the first liquidity that I'm seeing in this move is this low down here, right? This low down here. So I knew when we were here, I wanted to see this one get taken out. And what does news often do? It gives a very big knee-jerk reaction. So it moves down aggressively to take liquidity and then move up so aggressively afterwards. And what I always see, or what I very often see, is that technicals are aligning perfectly for news to come in. So, for example, a high is to be taken out, technicals will lay just underneath that high, news will take it out and it will move lower afterwards. So it is almost always going hand in hand. Now, in this case, price was basically taking out lows constantly, making fake pullbacks, fake like signs that price wanted to move upwards, and then just dumping underneath it, dumping underneath it, dumping underneath it. Then right here, we dumped underneath, very important, daily lows, right? Daily lows. And this was, if I believe, also a weekly fair value gap, also something very nice. So we had a weekly fair value gap, dumping underneath daily lows, and we started to move aggressively from there, with also a bearish dollar, with also a bullish euro. I thought, okay, there is no way in hell we're not going up, right? So price moved up very nicely right here, basically making a market structure shift as well with this move. Then it dipped below. We had the orders right here, a buy limit. Dip below, stops were underneath these lows, because I was thinking, okay, let's say this is not the liquidity is going to take out, then most probably it will be this low, right? If it is this low, then putting a stop underneath here is going to be very tight. If we were not basically going to respect this low, or if we're not going to only dip underneath this low, then our stops will be definitely in trouble if we put it here, right? The only wise thing to do was to put stops underneath this ultimate low down here. Now, let's talk target-wise. Target-wise, we were thinking, okay, price has to go up a lot, right? Or it could go up a lot. But the first one that we saw was basically this high right here. Now, why not this high? As this high made the last push to this weekly fair value gap, and it basically didn't take out any liquidity. Now, right here, this high was almost like a fake push. It looked like a very fake push, as it pushed up higher into middle of nowhere without this one taking out a low. I thought, okay, there could be some made up liquidity above here, so our stops definitely need to be on these candles. I like to put it on the candles, but to be fair, we were also targeting a bit above, and sometimes we were even thinking, okay, what if price could go up and completely reverse from here? So that was the position we took. Basically took everything off right here, and I'm glad we did, as we would have wiped up all of the profits if we didn't. But it's not really about the risk reward, it's not really about the profits made, it is just about the move and how beautifully it was created. Then on Friday, we also had like a little scale and something, but unfortunately missed the target by a couple of pips. We took some profits somewhere here on some accounts, but most of them got to break even. But that's totally fine, right? Price moved down lower afterwards, but man, this was a beautiful trade. This was definitely a beautiful trade, and I would say get into currency linking just to help your bias improve. Like you've seen, there was basically no way with a bias like this that it was not going to play out. Of course, be very cautious with thinking this way, as the market can do anything at any time at once. It's always super random, but if you can analyze right, you can tip the odds in your favor a little bit. Now, before you leave, if you want to have the chance to work one-on-one with me, check the first link in the description. I can talk for days about this, and we can take your trading to the next level. So guys, if you enjoyed this video, don't forget to leave a like, subscribe if you're new, and I'll see you in the next one. Bye bye guys.